traders, welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. So we got through that big CPI number. I say big because it wasn't a huge deal in terms of the data. It was flat, right? So how is this a big CPI number? Well, it's really about what it's sitting in front of, and that's a December 18 Federal Reserve meeting on rates. The one that was sort of 50-50, well, 60-40 in terms of whether or not the Federal Reserve is expected to cut rates at that December meeting. And by the way, we've talked about this before the election. We've talked about this through earnings. It doesn't matter. It's all about the monetary policy. And it's not about arguing about whether or not the Fed should hike or cut. I see a lot of that too. That's not trading, right? And so ultimately, the only thing that I right now am mostly concerned about, where we're going to have little data points between here and there. We might have different issues with individual stock narratives. But in the bigger picture, if the Federal Reserve is expected to cut rates December 18, coupled with the fact that the last quarter, Q4, has been strong, we are going to see window dressing, and we're going to see window dressing supercharged by an accommodative monetary policy. What is that multisyllabic word soup? That is the Federal Reserve is going to continue to cut rates. They're going to continue to lower the interest rate. That means lower lending costs, lower borrowing, right? And that's just where we are. And stonks love it. That's it. That's period. And I think the more we deviate from that, the more we want to overthink it, question it, argue with it, it's going to cost us money. Are we in a little bit of a holding pattern right now? Yes, because we had a huge rally on the 6th. And so we're just sort of levitating up here. And that means that until we have that next big push, right, we might stay in a little bit of a range as we get into the end of the month. But that does not in any way mean that there aren't going to be dips to be bought. And that doesn't mean that strength won't get stronger. And ultimately, that's going to mean finding not necessarily trades in the indices, because the trends of the indices are coming and going, but there are certain trends at sector levels and at stock levels that continue to outperform. All right. And that's really our job. What to trade? What is that watch list? Is it full of trending names that have a high probability of continuation? Or are we looking at choppy names, hoping they're going to burst out of their range? Are we looking at downtrends, hoping that they're going to, bottom out and start rallying? Hopes and wishes are for birthday cakes. We're traders, right? We want to find things that just have been moving higher and will continue to do so. And that really is it. And that list is going to change from week to week, sometimes from day to day. That list will change. And that's what I talk about with the fluidity of our watch list. We have to stay open to new names that are organizing into uptrends. We have to be able to discard names that are no longer acting in a way of high probability continuation. That's it. Trends going higher. And I am talking specifically about uptrends, because with the Federal Reserve cutting rates, this is not the time to be bearish. All right? If there are things in downtrends, let someone else trade them. The higher probability follow through is find something strong and move higher. Now I'm going to show you a really sad story. And this is Amazon. On Monday, and my Sector Secrets Mastery folks, avert your eyes. This one hurts a little bit. But I was mentioning to my mastery members yesterday, everyone's going to miss trades. But as long as we're looking in the right direction, probabilistically, we'll catch more than we don't. On Monday, we sent out an alert to buy Amazon. So I put a specific trigger in my alerts, not just buy it wherever, buy it now. We don't do that. That's not trading, by the way, right? Buy now. Since when is, that the way we act? No, there's always timing. Trading is timing. Timing is waiting. And it was, 9 cents? I think we missed our trigger by 9 cents. But you know what? Even then, I still say, you know what? We're still building our watch list on high probabilities. I didn't chase it higher yesterday. That's just a bozo move, right? What I want to do is find the dip. And if it's a day trade, don't get me wrong. There was a nice day trade on Wednesday for this. But I mean, for the longer term, overnight, trend following, swing trade, Monday was the trigger. So for those of you that often ask, Rog, what is it that gets you in? Take a look at Monday. Take a look at that wick. I missed my trigger by 9 cents. And I also want to use this example to remind everybody, everyone's going to miss trades, even someone who's been doing this for 3 decades. And even then, I was telling my members, folks think if you've been doing this a long time, that somehow you're unemotional. And, of course not. I think it only actually you become a little bit more emotional, but you also get better at capping them. When this is what you do, and this is what you do publicly, and this is basically your life's work, you don't think it gets more emotional? Absolutely. I'm probably more emotional internally about my trades in year 32 than I was on year 2. But I've also become exponentially better at just putting those aside and sticking with the process. So both those things are always happening. Don't think at some point you're going to wake up and be, Vulcan and not have any emotion whatsoever. Doesn't exist. So there's a great example of, yeah, we do miss trades, but as long as they're in the direction of where the market's moving and we had a good plan and the plan worked out, just didn't let us hop on the ride, I still take that as a positive. Right? Always work on shoring up your confidence, because the market will not do that for you, right? Market action will not do that for you. All right. In the meantime, there's a question about some other relative outperformers. Sure. I'll show you right now what we are focused on. And let's see, is that the link? No, that's Slumper Trading website. There we go. Sector performance. What's at the top of the list? So there's 2 ways we can look at right now what's happening. We can look at the last 1 month, actually 3 ways. We can look at the last 30 days, the last 1 month. We can look at month to date, what's been happening in November. But if you caught the top tier outlook show on Sunday, one of the things that I'm doing now is I'm starting to favor quarter to date, because the more we start to go into the window dressing psychology, and we're probably on the early cusp of it now, what's going to happen is money managers are going to go back and say what's underperforming. They're not going to want gold miners, probably. They're not going to want home builders. Healthcare, that's been a dumpster fire for months. What a terrible place to be if you actually want to see a stock move higher. There are exceptions always, right? But there's more likelihood of that outgoing tide on a rising one, right? Okay, basic materials, no. Real estate, no. Utilities, no. Staples, no. In other words, all those defensive sectors have underperformed so far in Q4. Why? Because we have risk appetite. Right? What's happened since September? 50 basis point cut, 25 basis point cut, and we're now motoring into another 25 basis point cut, 1 full percentage point lower in the Fed funds rate. Stocks, again, are going to like that. So look at what's atop the leaderboard, if you will. Regional banks, financials, 2 of my favorite sectors. If you're not looking at ways to get into regional banks, even the Russell, Zion's a good one. Keep an eye on financials, XLF, JPM, Visa, Wells Fargo, what else? Bank of America. Did I mention Bank of America already? So those are going to be sectors and stocks that we want to keep an eye on. In some ways, performing better than the indices. Always be open to keeping that watch list fluid. And that's what we're doing right now. And by the way, that's where the dips are following through, right? Okay. So when we go back to, and who asked me about XME? Let's go back to XME. Sure. Do I like it? Absolutely. Are there relative outperformers within XME? Here's a challenge with XME. Jas, I do like XME, but let me show you what we did in the room. This is an open position that we have. So, this is where talking the book is all that matters. I don't need to be talking about positions I don't have or have no intention of taking. So let's talk about what we're in and what we're actively pursuing. At the beginning of the week, by the way, there were 2 symbols that I wanted. We sent those alerts out on Monday. Amazon was one of them. Alcoa was the other. And the reason I wanted those 2, I'll show you right now. Here we go. Amazon and Alcoa. Why? The reason I went with Alcoa, Jas, this is the difference. These are the things that we teach in the mastery. Boats versus tide. Boats versus tide. And what that means is, take a look at XME here. Freeport Mac brand, Newmont Mining. These are very heavy stocks. They're moving lower. And if the heavily weighted names in a sector are moving lower, that means the sector is going to have to overcome the weakness of those 2 stocks to climb higher. Look what's moving higher. 2 of the names on the list here were Alcoa and MP. So take a look at Alcoa and take a look at MP. Does everyone see the 2 green momentum, green trend, those two green trade flags? That's where the boats are going to make more sense, because for XME to continue higher, it's going to need basically Freeport McMoran and Newmont Mining to simmer down, and they don't look anywhere near ready to do that. So that's where we say, thank you, Tide, but let's go get a better boat. Let's go get a better boat. Okay. So that's, any questions from the essentials room on that? No. So that's what I'm in. So Jazz, I'm not playing XME. We're in Alcoa. We've been trying to set that up since Monday. We set out alerts again yesterday, and that's where I'll go with the boat versus the Tide. All right. Let's see. Sandhu says, good morning. Good morning, Sandhu. You are a very disciplined trader. Well, I appreciate that. It's just sticking to the process, right? You know what I'll tell you again, discipline isn't something you just wake up with. I wasn't a disciplined trader in the beginning. There's 3 things that have really helped with discipline. 1, having confidence in a process. Let's just take away trading and add in diet. If you were trying to put on weight or lose weight, right? And you had a process that showed results pretty quickly, would you have discipline to it? Probably, because what you wanted was what you were getting. And then it's not so much work to do that regimen, whatever it may be. So a lot of discipline comes from seeing results, right? Which is why I think for me, to help my Sector Secrets Mastery folks gain confidence in something I've been doing for 3 decades, I'm going to show results, both good and bad. So the bad result could be we take smaller losses less often, right? And the obviously good result is we take larger wins more often. That's one way to build confidence and discipline. All right. The next thing is, don't listen to too many voices. One of the biggest challenges in the modern internet is how many people we're going to be bombarded with that have an opinion about how to trade. I'm not saying any of them are right. I'm not saying any of them are wrong, right? They're just opinions. And so at the end of the day, the most important thing that you can do right now to gain discipline is 1, maybe 2, like a complementary approach. If you're looking at 2 disparate approaches, if I'm a buy the dip trader, which I am, and you're following a momentum trader, you're doomed to fail, because those are 2 very different ways of trading. The watch list will be different. The process, the timing will be different. So if you are going to look at more than one approach, make sure it's complementary, right? And then ask the person you're learning from, what is your basic philosophy about market entry? And you know mine, find a trend, buy the dip, rinse and repeat, right? And then the last thing I will say in terms of discipline is learn to hate losing more than you love winning. And they're not the same thing. So for me, I calibrate everything to don't make a dumb trade. Don't ever be in a trade you regret taking. I'm okay, quote unquote, missing a trade. That's fine with me. That's life. Yeah. But what I won't tolerate of myself is being in something sloppy and sitting in a position where I said, darn it, I know I shouldn't have taken it. Right. That's where I'm veering from my discipline. If you can do those 3 things, that's really it. I'm not that disciplined in most of my life, but I've calibrated to those 3 things. And then find a group, if there's a 4th, Sandhu, find a group that's doing things in a similar way. So you have a community, you have a support. If you're in a group where people are doing things 20 different ways, you're never going to be able to do the first 3 things. So the really important thing is to find a group that's saying, yes, we have bought into this process. We're going to be disciplined to this process, and we're going to support each other through the process. Then it's almost impossible to fail. Right? It really is. It's almost impossible to fail. One of the things that I look at, I'm part of my own group, right? So one of the things that when I'm in the Sector Secrets Mastery, I try to impose that discipline on my trades, and then the members right back are saying, Rag, are we veering from the process? So we get to check each other. And that's where it really starts to feed on itself and become exponentially more fun, frankly, and more profitable. And transparency, right? Nobody in my room is ever waiting to get a fill order from me. When I have a setup, they get the setup alert. No one is ever waiting to hear when I'm getting stopped out. They know the stop at the very onset of the trade. Nobody's waiting to hear from me whether or not I'm going to take profits, because that's included in the alert. So we get to really, truly act as a community, because everybody knows, everyone's on the same page. No one's waiting with bated breath to see what I do next, right? And we all stay disciplined because of it. So yeah, I appreciate that, Sundu. I think everyone can achieve that, in terms of discipline to trading if they follow that process. All right. Next up is SMCI. SMCI, you're short, Brian? Awesome. Good for you. Is there a bottom? Oh gosh, I don't know, my friend. If there's going to be another leg lower, it's going to be through likely 20 and a half to 20. And then once we get through 20, it'll probably continue to drop. So I would say don't worry about how low is low. Put a cap on how much unrealized profit you're willing to risk, because you've got a fantastic trade. So wonderful, Brian. So just so everyone knows, this is from the Essential Room. Brian has been smartly following the trend. Well done. You've been short for weeks. Wow. I mean, that's fantastic. Find the trend, short the rip.
That was easy.
Awesome, Brian. Yeah, I love it. What I would say is, I don't know what the low is. I mean, 0 is obviously the goal, right? If we can take out that Darvis support, take a look at some volume ledges. So maybe, Brian, pull up SMCI on, say, a trading view. Look at the daily time frame. Look at where there might be some size sitting, if any at all. Obviously you're on the side of the trend, and that's the best way to go. So I would say if we can break that support level, I'm not sure where we are right now. I'm trying to see. Oh, pre-market. There you go. Brian, just hang on. Just what I would say now is start to trail a stop. Well done. I mean, well done. So next up is IWM. Okay, so yes, Jess, if I'm looking at an IWM, I'm always going to take a peek at what's going on RTY. And all my cards on the table, we've got a long position in IWM as of yesterday. And I've been wanting to get long either KRE, RTY via IWM ETF or Zion, ZION. That's a great alignment, and we're long as of yesterday. So we'll see where this goes next. It was a daily price movement range entry, and I held off on swing buys Tuesday because I wanted to get through CPI Wednesday, because if that CPI was hot, look out. We would have definitely seen the expectation for December 18 rate cuts evaporate. I mean, vaporize. And that would have sent equities a lot lower, quicker. And so what we decided to do is err on the side of risk management. We tapped the brakes on swing entries going into CPI Wednesday morning. And then after CPI, with a better macroeconomic understanding of where rates were going, we started putting in some more swings. So yesterday we got back to work. All right, gang, that's a wrap. So thank you as always. Thank you as always for being here for Charts and Coffee. I will see you all tomorrow, same time, same station. Be good to each other.